In the vast expanse of ETFs, the iShares Core S&P 500 ETF, IVV, and the Vanguard S&P 500 ETF, VOO, stand as titans, mirroring the mighty S&P 500 index and granting investors instant access to America's corporate elite. But beneath the surface of near-identical performance, subtle nuances whisper tales of individual strengths and quirks. Deciding between these seemingly homogeneous behemoths demands a discerning eye, attuned to the symphony of fees, liquidity, and issuer philosophies. Echoes of similarity, a foundation of shared might. Both IVV and VOO resonate with a harmonious tune of near-perfect tracking. Their correlation to the S&P 500 hums close to 1, ensuring investors capture the pulse of the American market with remarkable precision. This shared strength forms the bedrock of their appeal, guaranteeing investors exposure to the 500 companies that drive the U.S. economy. Furthermore, both maestros conduct their symphonies with an almost imperceptible touch when it comes to fees. Their expense ratios, a mere 0.03%, represent a whisper in the grand financial orchestra, ensuring that returns remain beautifully untarnished by excessive deductions. And to further their synchronized elegance, both boast exceptional liquidity, with billions of dollars waltzing across the trading floor daily. This translates to tight spreads and the effortless execution of trades, ensuring your investment journey remains smooth and swift. Nuances in the melody, where paths diverge. However, beneath the surface of this harmonic convergence, whispers of differentiation begin to emerge. The first distinction arises from the lineage of these titans. IVV draws its heritage from BlackRock, a global asset management behemoth whose name echoes through financial halls. VOO, in contrast, bears the Vanguard stamp, a champion of low-cost indexing, forever etched in the minds of cost-conscious investors. While the size of their assets under management, AUM, might seem like a mere technicality, it subtly influences the liquidity landscape. VOO, with its $313 billion under its belt, edges out IVV's $328 billion, potentially offering marginally tighter spreads and easier trade execution. However, this difference is akin to a whisper in a roaring crowd, unlikely to significantly impact most investors. Another subtle note in their melody concerns the number of holdings. Though both waltzing partners embrace the vast majority of S&P 500 constituents, VOO holds 504, while IVV twirls with 502. This minute discrepancy, while inconsequential for most investors, can contribute to a whisper of tracking error, though it remains barely audible to the untrained ear. The distribution policy adds another layer of complexity to the tune. VOO, the ever-efficient maestro, automatically reinvests dividends, allowing your wealth to compound in a silent crescendo. IVV, however, offers a choice, the grace of automatic reinvestment or the freedom of cash distributions, catering to investors who prefer a more hands-on approach to managing their income stream. Finally, the minimum investment requirement strikes a different chord. While IVV welcomes investors with open arms, regardless of their financial standing, VOO sets a $3,000 threshold, acting as a gentle barrier for those just starting their investment journey. Composing your investment symphony, choosing the right instrument. So, who emerges as the champion in this ETF concerto? As with any artistic endeavor, the answer lies in the personal preferences of the investor. For the cost-conscious maestro, VOO's slightly lower AUM and automatic reinvestment might hold greater appeal. Their liquidity advantage, though subtle, might resonate with short-term traders seeking the smoothest execution. The flexible investor, however, might find solace in IVV's cash distribution option, allowing them to conduct their own financial choreography with their dividend income. Additionally, those with strong brand loyalty might find comfort in the familiar embrace of BlackRock or the low-cost philosophy of Vanguard. Ultimately, the choice between IVV and VOO is not about crowning a single champion, but about finding the instrument that harmonizes best with your individual investment goals and risk tolerance. Remember, the true symphony of wealth creation lies not in the technical specifications of your chosen ETF, but in your long-term investment strategy and unwavering commitment to your financial goals. Conclusion: a harmonious duo in the ETF symphony. IVV and VOO stand as titans in the ETF realm, offering investors a mirror image of the S&P 500's might. While their similarities abound, subtle nuances in fees, liquidity, distribution policies, and issuer philosophies create a tapestry of choice for investors. The ultimate decision hinges not on crowning a single victor, but on finding the ETF that resonates most deeply with your individual investment symphony. Remember, the true harmony of wealth creation lies not in the technical specifications of a single instrument, but in the artful composition of a well-diversified portfolio, guided by a long-term investment strategy and an unwavering commitment to your financial goals. As you navigate the ETF landscape, let your investment goals be your conductor, your risk tolerance your orchestra, and your personal preferences your melodies. Choose the ETF that best complements your unique financial composition, and let the symphony of wealth creation begin.